Hi, I'm Corbett Daly with Hot Sheet Live. Today, the Obama administration announced a plan to help homeowners refinance their mortgage to a lower rate. It's an expansion of an existing program. And we're here today with Dean Baker, who's the co-director at the Center for Economic and Policy Research, to talk about the program. Dean, thanks for joining us.
Thanks for having me on.
So in essence, what is the program?
Well, essentially what this does is it makes it easier for people to refinance and lets some people previously not been able to refinance because they were too far underwater. It gives them the opportunity.
So underwater being they owe more on their house.
They owe more on the value of the house. So
right.
Formerly it had been the case that you could refinance up to 125% of the value of your home. That was much more than is usually the case, but that was earlier done when President Obama first took office. Now he's raising this, well, there's no cap, I was going to say. So you could refinance whatever amount you're underwater. I should point out this is only for homes that the mortgage is held through Fannie Mae or Freddie Mac, which is roughly half.
And those are the government-sponsored enterprises that are backing about half, you said?
Roughly half of all mortgages in the country, yes.
And also, would they still have to qualify for the new payment, even if they've been current on their existing payment?
No, the point would be that regardless of what their situation is, if they're in a Fannie Freddie mortgage, then they would be able to refinance, even if in principle they wouldn't otherwise be able to qualify. And the logic is that we're already on the hook for that. So we have someone that owes $300,000 on a $200,000 home. We're already on the hook for the $300,000. So what's the harm in letting people refinance?
Right. In February, the administration announced they wanted to lower some of that government backing, and they wanted to do a gradual wind down of the government support for the housing market. Do you think today's announcement is an admission that that was a mistake?
No, I think there are two different issues here. One is, how do you deal with people who are sort of victims of the crisis? They got bought in near the peak of the market, prices collapsed, they find themselves having difficulty or finding it impossible to pay their mortgage. How do we help those people? Then a separate question, what do we want the mortgage market to look going forward? And I don't think there's any change from there that they want to see the government playing a smaller role in the mortgage market going forward, although what that role is, I don't think has been determined.
Right, and the administration seems reluctant to estimate how many people are going to be helped by this. Some say that's because it's probably not going to be very many. Do you have an estimate, or?
Well, I was just on a show earlier this morning, and Mark Zandi with Moody's.com had estimated 1.6 million. I think that sounds overly optimistic. If we see half of that, if we see 800,000 people are able to refinance because of this program, I think that'd be very good.
And how much do you think that would help the economy? Because that's still only 800,000 people.
Yeah, it's not a great deal. So let's say we assume that the average person saves 4,000, probably a little high side estimate. That gets you somewhere around 3.2 billion in additional spending. That's about 2/100ths of 1% GDP.
Right.
So it's not going to be big in terms of the economy as a whole.
Because it's limited, essentially.
Yeah, it's you're talking about a limited group of homeowners, a limited amount of aids, so it's helpful to those people. So in that sense, I wouldn't trivialize it. If we could find 800,000 people and say we're going to put 4,000 a year in your pocket, that's a big thing for them. But for the economy as a whole, that's not that big a deal.
An advisor to Mitt Romney, as you know, is Glenn Hubbard, who worked for President Bush in the White House. He was his top economist. He and another professor at Columbia University, where they now are, have a proposal that would be similar to this, but it's even more expansive. Why do you think the administration didn't go for that wide automatic refi program?
Well, I think it's actually somewhat similar. I'm not sure if there's huge differences, because I recall reading through that proposal thinking, well, a lot of these things sound really good, but when you get to the nuts and bolts, I don't know if it'd be quite as they had laid it out. So I don't think, if you took, and obviously you'd have to get Mr. Hubbard here to speak for himself, but if you took his proposal and say, okay, what is it that you wanted President Obama to do that he's not doing? I'm not sure concretely what that would be. I mean, there's things we might all like, but it's never a seamless process to have a mortgage refinanced, and I think they did as good as they could to try to make it as seamless as possible.
Right. What would you advise President Obama to do if you were in charge?
Well, one of the proposals I've been talking about since we first got into this crisis is right to rent, allowing people that can't pay their mortgage or facing foreclosure the option to stay in their home paying the market rent for 5 years. The Irish government just did this, and they're predicting that 10,000 homeowners will take advantage of it. That would be the equivalent of about 700,000 in the United States. So this is kind of a middle ground. People are able to stay in their home. They have some security there. And after 5 years, in principle, you might imagine a lot of the banks would offer to sell them their home, because why not? If you have someone who's been a good tenant for 5 years, why wouldn't you just take advantage of that?
Right. Another housing policy question. This, as you know, some of the loans that are backed by Fannie and Freddie, the top dollar amount reduced a few weeks ago to about $625,000. The Senate just voted last week to raise that back up to $729,000, where it's been for the last few years. Do you think that's a good idea?
I think it makes sense to start to pare down their role in the market, and that's exactly the way to do it. So we're talking about a very small swath of the market, that's 625 to 725, and that seems to where you have to start. You don't want to move too quickly, because given where the housing market is today, the last thing on earth you want to do is chop out the legs. But this is a very small swath of the market, so I think it was the right move to lower it 625 and look as the economy starts to recover, which unfortunately is taking longer than any of us want, to move it down further.
Is there anything I missed about today's refinance announcement?
Well, I guess I'll just say one more thing. In terms of the people who are really bad shape, I mean, people say, what do you do with someone, they give me these extreme cases, someone owes 200% of the value of their home. I think for some of these people, what makes the most sense is to walk away from your mortgage. I mean, that, some people are doing that, and, I know no one likes to do that. People like to pay their bills. They're worried about having this mark against them. But in some cases, that will make sense.
It's essentially a contract that says, I'll pay you every month, and if I don't pay you, you can have my house. So here you go, have the house.
Exactly. And, no one wants to do that, but, sometimes that may be the best option.
All right, well, thanks for joining us.
Thanks for having me on.
I'm Corbett Daly with CBSNews.com, and we've been speaking with Dean Baker. He's the co-director at the Center for Economic Policy Research here in Washington.